Good evening. Ira Epstein with your SPDR ETF stock market wrap-up for this Wednesday, the 10th of January, 2024. Well, tomorrow morning, we're going to get at 7:30 in the morning Central Time the CPI number. All eyes are going to be on that. You know, we're going to get jobless claims as well, so you got to be looking at these, but that's a weekly number. We'll see if labor is starting to weaken at all, but we haven't seen that yet. All the jobs reports last week, to me, were stellar. They were still very, very strong. We now want to see is core and headline CPI weakening or not. And no matter what they show, let's assume that they go up. The argument will be if they go up, well, people don't understand. It's going to weaken next report because of such and such and such. The market is fixated. I don't know what better word to use. Fixated that inflation is going to continue to fall. It won't be stubborn. It'll come down, and it wants to see that the market's going to move in March rather than April, June, whenever the Fed decides to move, all right? I'm not in that camp, and I think you know that. I'm still in the camp that says core inflation is very sticky. You've got to start breaking the housing numbers in order to do that. I see parts of the country did see that in December in terms of rent, so we'll see. Is it going to finally show up or not? It's been eluding the market. It's very elusive, and the Fed does look at shelter costs, so we're going to see. So I think tomorrow is super important, and I'm going to remind you, why would you stand on a train track? There's a bullet train going to come at you at 200 miles an hour, and you think you're so good you can just jump out of the way, it'll go by you, you're back in and you're taking advantage. Well, that's the market situation. Why not let the CPI, if you're not in the market, go by you as a trader? If you're in it, what can I tell you? You've made your decision. You decide if you stay with it or not, all right? There's always the aftermarkets to come out. You can do that. Bitcoin. So we saw 11 funds approved by the SEC. Now, here's what I can tell you, knowing my experience. I remember I've been a stockbroker, commodity broker. I owned stock firms. I owned commodity firms. I mean, it's blah, blah, blah. It's a guarantee that the watchdog is going to be all over these funds as they get going. They're advertising, how they operate, what they do. So be careful. The firms that let you invest in them, the stock firms, the firm you're with, will be very, very selective about what you can do and can't do. They're going to be looking at it in a big way. Understand that if you have an ETF and you thought that you were going to be anonymous owning your Bitcoins and all, you're no longer anonymous. The moment you have a stock trading account in America, everything about you is known. You got your social security number, where you're doing it, your place of residence, your phone number, your income. You are on Uncle Sam's docket. So for the money that is, we'll call it gray or way out of the system, they're not going to use the ETFs in any manner at all. They'll stay away from these. You want to. I'm not going to cover them until we get probably 2 months or so, 3 months or so of data, because I need that to be on the charts. What about the cost of them? Well, what's going to happen is the race is on to zero. You heard me, zero. Cathie Wood's already at zero. Why? Because they want the volume coming through them, so they become your place of business if that's what you're going to do. And to earn that from you, they're going to be very, very genteel and say, no charges. It's the way to grab share. They could even pay you. I don't know what they're going to do, all right? But, you know, how do you operate at zero running these? Because there's a lot of costs associated in running an ETF. People think you just put together an ETF and, oh, it doesn't cost much money. I had a good friend, a big trading advisor, wanted me to do one. I went to our clearing firm, had a long talk, and they showed me all the costs. And they said, Ira, most of these things come out, they fail. The cost associated with putting them out, we're talking in hundreds of thousands of dollars, maybe $1 million. Regulatory and all, most fail. And we didn't do it, and that advisor got very mad at me because he thought I could pull it off, and the math wasn't there. Okay, I get it. I see it, okay? I was out of my realm anyways. I'm a commodity guy by nature. And I was going into the stocks, and I said, how hard can it be? Well, it was much harder than I thought it could be. And you learn. And I've owned stock firms. good sized ones at one point in my career. So you just move back and forth with all this and you play it. Now, before we get too far, we're having a live webinar that you're invited to, and that's going to be this coming Tuesday, the 16th of January. You need a user ID and password and a link to get into it. If you're on my mailing list, it was sent out to you this morning, and it's either in your box, spam, junk, or if not, you can call my staff. They can send you the link again, or you can move your cursor up to the top here. And when you do that on a computer, what will happen is you'll see the icon, you fill out then the form, you'll get from us your user ID and password. We change them on every meeting, so you'll want to get those from us. There's also going to be a link in there if you want to write a question of me of certain charts you want me to cover. It's very fast-paced. It's 20 minutes long. It is not meant to be 2 hours. I know you're busy. I'm busy. We get on with the day. This is the first one I've done in 4 months. So there's a lot that we're going to be talking about. A lot of questions are going to come in. I sent the first invite out today to my list of specials, and we're already probably, 25, 35% full. It'll go very quickly. And yes, there's finite seating amount with it. I do not record it to post on the website. You either make the time to come or you don't come. You don't get to see what it's about. I used to post it and everybody'd go, let the other guy ask a question, I'll go look at it. Not interested in that, all right? I don't need the questions. I'm helping you. You're not helping me. Therefore, make the time, do it, and I'll see you there. Okay. So now let's see what we've got. SCHD, does it get more sideways than this? Just take a look at that. There's really not a lot going on. If you don't know what this is, hit pause. When you hit pause, you can take a look right here and read what it is. This is very popular. And the market has come up dramatically. It has gaps left in it too, all over the place. I was looking at it. There's one there, and you had one here. Wow. So is it a breakaway, runaway, exhaustion? I don't know. That's the 3 gaps you look at in a chart pattern. It could be. People can look bad, and if you break down, that's what they'll say. Right now, I want to see how does CPI come out? How does PPI come out? What are the earnings going to look at? I don't need the whole earnings season, but I think everybody's waiting for the CPI report. It's a biggie. When we look at SCHD, the Schwab Dividend Equity ETF, you have higher lows, higher highs. It's bullish. The market is over the 18-day average. Do you remember giving you an education yesterday when we were talking and I said, you're going to see, and this is where we were 2 days ago, Monday. I said, the support's the 18-day average, but if you get there, you got to break that low. Then what you look for, what did time do? Now the average jumps yesterday, and I'm saying, okay, now you can afford to break there because it's over the 75.87 level. Well, when you open today, you're going to get another moving average that's going to work with it. Tell me you didn't go right down and challenge that zone and pop. Right? Tomorrow you can do the same thing. Where's the resistance? It's the Bollinger Band. Look at how narrow they're getting in. This market is forcing everything volatility out of the market. You see that in the sideways action. And that forces the Bollinger Bands to narrow. And from the narrowing comes the big trades. Whenever you narrow in, you did it here. Look at the big trade that developed. It's over and over. So get your money ready because things are going to be happening in these markets. Which way is going to be the question? You lost the embedded reading. You made your run to the 18-day average, missed it by 4 cents. That's the same to me as getting to the number. And now the game is on. We'll see what's going to happen. In Rivian, I don't think there's a lot of downside beyond the 200-day average in gray, 1865 to 1817, but I am not a bottom picker. It would be an area that I'm telling clients who are short that is the zone you're looking now to be out of the market on. That's what I'd be explaining to them. In UGA, the gasoline fund, well, all you did is you came back to an area that's the resistance, the 18-day average, off the lower band. Again, I know you know that I'm a Bollinger Band guy. A lot of you label me that on the internet. I think it's funny. It's true. to a very big degree. I'm not the guy John Bollinger is who developed it, but I think I put a better twist on it than he has. And when I look at the markets and I look at where they're at, I go, wow, interesting. So you're bouncing away from there, and where's the line in the sand? You hear me say it to you all the time, the 18-day average. So the bias is still down. If you rally tomorrow, the most you could do is end the downtrend by getting the market over the 6150 number, which then you have 3 layers of resistance, the 100, the 200-day average in the upper band. So you've got a big sideways market here. In XLF, people are going to be all over XLF. The financial services are in focus. They're in vogue right now. What are the banks going to do? Are the banks going to put away how much money for bad loans? Yeah, that's what we're going to be hearing. Conference calls are going to happen. We want to listen to them because they'll give us an idea what they think. Now, the banks will be, generally speaking, overly conservative, put away more money than they have to for reserves. Then that doesn't happen, and then they turn around just the way that they did last year, and they go, we don't see this money having to be needed. We'll either buy back stock or we'll declare a dividend, blah, blah. We'll get the money back to our shareholders. But they are so smart in doing what it is. Set the bar low, put the reserves away, and make yourself look good when you can make that statement. We're very much in sideways action here. This is how they all are right now. I wish I could tell you, I think it's boring tonight for me to do this. AMC, I don't want them to fail. I don't want them to go out of business. You know that. But here they are. I said they'd probably crack the $5 mark. They've now done it. They're at $4.91. And I said what used to be the goal I thought the market would fight at on rallies would be 7. Now I said it's going to be closer to 6. Well, it's 5.95 tonight, so I'm not too far off on that. But still a bearish chart, embedded. I don't know how low is, but the movie business stinks. Can I make it any clearer? Beyonce's not putting out another tour right now. Neither's Taylor Swift. So everybody after them is not the A list. Everybody is the B list after those two performers. So the concerts aren't doing it. They need the movies, and they're not going to get them till February, March, in my opinion. Maybe they can come up with something clever. I don't know. RSPD, and this the consumer weight. I wanted to say weight loss drugs. I'm so used to everybody talking. And that's going to be a big business. By the way, sooner rather than later, the health companies are going to get the idea that if you can take weight off people, you don't have to pay as much for heart disease and other things. There's a lot to be said for these drugs if they work, and so far they look to be working. I'd like to see at least a year or two of them really in mainstream before people just jump on the bandwagon, but they're going to. But I predict it's just a matter of time till the health companies realize smaller people, not obese, smaller people are healthier people. Healthier people, what are your health costs going to do? That's important. Will the drug companies go along with it? Not at the beginning. You can see how the market is sitting here. Resistance, 47.13, but how much sideways action do you have? Home builders, sideways action. I don't think there's a lot of downside in the home builders. I've given you all the reasons yesterday. Everybody wants to step in. Today we had the mortgage numbers. Did you see the refinance percentage increase? 19%. It's not as though mortgages crashed, but they did come down a good amount. It was over, about a 12% drop or so. And that really brought out the refi people. Wow, that was impressive. That just gives you an idea how good this is. I think home builders look very good for 2024. XLE, the energy sector, no. If the economy slow down, if the recessions happen, as people keep saying, nobody got it right. Do you agree with me in 2023? All the so-called banks that have all these great analysts, we're going to have a recession, it didn't happen, all right? I don't know when the slowdown comes. I don't understand, and I admit this to you, and there's guys way brighter than I am on economics, how you can have this strong of a labor market and have a recession. I have said this repeatedly all year long. Why would I change now? Weaken the labor and the rest sort of falls into place. Don't weaken the labor, the rest doesn't work. Not telling me we're going to have a recession. Slowdown can happen, not a recession. There's a big difference between the two. Gold, you're oversold. You're down hard right now. Even the healthy attacks don't lift it. So the only thing that can help gold, in my mind, is CPI coming in strong tomorrow. That could capture the people that are short, because then you're back to it's sticky and it's staying sticky. Focus on shelter costs tomorrow. The Fed is focused on them. Are they going to drop? Are these rents going to drop? What's going on there? SLV, weak as can be. You see that in the gold-silver ratio that I show in the futures, but this is the short cover area now in the silver. You're finally down there. In the copper market on futures, you got to the short area today. You're just shy of it now, right here, and you're already oversold. So a lot of these markets that are down, there's no bargain on the short side that I'm seeing. That does not mean I'm looking to be a buyer. There's just no bargains left being short. And too many of the markets are like BND and TLT. Look at how narrow they've gotten. Out of this, trends are going to come. And they're going to come right away at you. They're not going to come the end of the month. They're going to come right away. We're going to get some new moves. It could start tomorrow. Be on your toes. I want you to go to sleep. I want you to take some vitamins. I want you to wake up in the morning fresh. I want you to be looking at the market and pick what you want to do. When you lost in UUP, the bearish embedded reading, the goal was to get back to the 18-day average. You did it. Was it a big move? Of course not. But it did the job. It got right where it should, and that means FXE should probably also do something. But it wasn't embedded, so it doesn't have to do it. It's just oversold. Embedded is so different than not being embedded. Learn that. Take the Enhanced Bollinger Band course on the website. So again, I want to see you in the webinar. How do you get there? If you didn't get an invite, or if you're not in my mailing list, you've never done anything, give my staff a call, 866-973-2077, or move your cursor to the top if you can. You'll see an icon, fill out the form, and sign up. I don't wait around for you. I'll open the webinar on Tuesday at 12:15. Get yourself all situated. I start talking at 12:30, and I'm done 20 minutes later. You have a great evening. I'll see you tomorrow.